How are you? My name is Nate Swaby. I'm with Swaby Estates, CasaTank Realty. I'm just looking at doing some videos. I thought maybe I spent a lot of time in economics, politics, global macroeconomics, and real estate obviously being my key, being a real estate broker. And I wanted to say, why not spend my time as well providing some value to people and show them how we're doing in terms of economy right now, and how that relates back into real estate perhaps. And maybe I can get all this information out and actually provide some real quality information back to the viewer, and with that at least give them some insight on what they should do if they were a buyer in this economy right now, looking to buy their first home, or maybe they're looking for their first investment, whether that be property, equity, however you want to invest your money, but you wanted to invest it wisely. I figured I could probably shed some light on that, since my focus is understanding all this information. And I thought this would be a great opportunity for a first video, since we're in a really interesting time of the economy. Of course, we're at the end of a business cycle, or economic cycle, in which our interest rates in this particular cycle is the main factor as to what we're going through in terms of economy and our downturn. And remembering that this is all part of a business cycle. It's an economic cycle. This happens every, give or take 8 to 12 years. In this case, we had an extended cycle. But when this happens, it also bodes a lot of opportunity. And some people would like to know, perhaps, how do you get to take advantage of this opportunity? And this is kind of what I wanted to talk about, and at least provide some information and some knowledge on it, and share that with people so they can make better decisions. And this is obviously going to be in relation to a number of videos I'd like to post out there, and just kind of add some value to the viewer, right? So let's talk about economics. So economics is very key, especially in my industry. I got to know what's going on in the world and why. And how does politics fall in line with the economy, because that's a big factor. They make all the decisions in the economy. And of course, how does real estate fall into this? Now, in the economy right now, obviously we're in a position in which interest rates are super high, which makes things very difficult and unaffordable, of course. But that's the point. The Federal Reserve in the U.S. and the Bank of Canada in Canada are basically the same person. They have the same tools that they use to correct circumstances in the economy that have gotten out of hand, for example. And in our case, we know that inflation was rather high, and the reason for that, obviously, is because of when COVID came in. It obviously turned our economy upside down, and people weren't working and they're staying home, and businesses had taken large hits. Myself as well, I was a business owner of restaurants and stuff. So all this stuff happens, and it affects that person dearly in a way that we've never seen before. And in that happening, there's obviously a lot of money that was pushed out, which essentially injected capital into the markets. Very easy capital. And obviously, if you're going to sit at home, most people are actually going to spend that money. And that's basically what happened, an excessive amount of spending. And with all that spending caused things to fly up in price. Obviously, real estate being a big one. You've seen real estate prices jumping 100, 100, 200, 250,000 over asking, which is people wondering how the heck can that be? And everybody's jumping in trying to make money because money's flowing everywhere. And for that reason, the Federal Reserve and the Bank of Canada need to step in at some point, because it becomes unsustainable. It just cannot sustain that path. It's just not realistic. And people are it's impossible for people to get into the housing market, of course, especially in Canada, because things were just too much. And Canada happens to focus dearly on real estate. Real estate is one of the biggest factors in Canada. It's one of our biggest productivity measures or metrics. Unlike the States, where they have a variety, they're very diversified. We're focused mostly on real estate in this country. So with that being said, we know that the economy was there's a lot of inflation in the economy. So the Federal Reserve and the Bank of Canada's job is to raise interest rates, which is one of their main tools that they use in order to correct inflation, of course. And when this happened, it happened very quickly. Obviously, there's other political reasons why things lagged, and the Federal Reserve does use a lot of key metrics to identify reasons for interest rate rises and interest rate drops. But in this case, interest rates flew up very fast. So obviously, when you have something move very fast, it's going to affect something else very fast. Now, real estate's interesting. Real estate moves with a lag, usually 6 to 8 month lag. And stock markets typically reflect very quickly. Obviously, that's usually instantaneous. You'll see things reflect relative to the news immediately. But real estate does take time. So with that lag that there is, obviously our economy takes a little longer for us to realize all this difficulty with interest rates. Now, the higher the interest rates, obviously the higher you must qualify for. And of course, we still have the stress test in Canada, makes it even harder. So as you can see, with a higher interest rate, stress test, all these things you must qualify for, including income, debt to ratios, it's very hard to afford for anything. Anything over $1 million becomes very difficult. To have the income to support a house at $2 million is very difficult. So what you have is now, with that kind of force on the pressure of the real estate market, you start seeing the market come back down. And the reason being is because there's just not enough buyers. There's way more people trying to sell. People are having difficulties with their mortgage payments. And with that, obviously, it's going to tug down on the market. Less buyers tugs down on the market. This allows an opportunity for the buyer now, and it turns it slowly into a buyer's market in which the seller no longer has the full control of the situation and the buyer has a little bit more control. They have the ability to negotiate a bit better. This is the market that we're in right now, and this not only relates in Canada, it relates elsewhere as well, because most of the world is going to follow suit of the US market, because the US kind of makes the narrative for the entire world. Because the US dollar is one of the most used currencies that pretty much controls what things happen in and around the world. Not every country will follow suit, but of course, without following the US's moves, you'll tend to impact other things such as trade in terms of currency value, depreciation, and so forth. So it's very important for most countries to follow the US's moves. So a lot of the information that you're going to find is very important to follow is usually in the US. You also have to be mindful of Canada because you live here, but most of the information coming from the US is going to be very key. So in our case right now, what we do know is we know that the inflation rate has been coming down. Our last CPI and PPI reports were actually quite low, lower than expected in the US. Now, although that's a bad thing, we would qualify that as a good thing, because how that will reflect is we start to assume that there's no more rate hikes coming through the pipeline, because the goal of the Fed and the Bank of Canada is to reach a 2% inflation rate. And before that, we were much higher than that. And that becomes unsustainable. So in this case, what we're doing is we're pulling back on that. And they want to do that. They want to change the mindsets of people to ensure that they're not spending. They want people to stop spending. This is the purpose. And then with that, inflation comes down to a more reasonable 2%, as anything beyond that becomes unsustainable, of course. And in turn, they also bring down pricing and stuff. It gives the time for the market to reset a bit. But this also adds for an opportunity. If you are a buyer, you're looking to buy a home right now. Right now, you have a great opportunity to negotiate pricing. That's a great thing. I mean, if you have the money to do so, yes, sure, the rate might not be the best rate this moment. But as soon as interest rates start coming down, guess what? The opposite happens. The asset prices start to rise again because affordability comes back in. People can now qualify for properties again. They can qualify for higher amounts. So naturally, then people start coming back to the market to buy. Investors will come back to the market because now it becomes sustainable. If you're an investor looking to buy an investment property and the cost of debt servicing is really high and you can't even break even, I mean, ideally break even would be the proper place to be right now, especially if you're going to take advantage of the market. But most people will probably not break even at the start. But the goal here is to purchase while the opportunity is there, to buy a property, and you actually have the ability to negotiate. When the markets come back, assuming you're on a variable rate mortgage, well, guess what? Your asset, you bought at a reasonable price, and the cost of that asset, the debt servicing of the asset comes down. So now you can remain now in a cash flow positive position. That would be ideal. That's the idea of taking advantage of the circumstances. Same thing with the stock market. Stock market might be taking a hit. It's taken a hit since the end of July into August. We've had quite a big downspin. And this is an opportunity, right? We have asset classes such as tech classes, for example, tech stocks. These things are cyclical, of course. In a situation where we have a high interest rate environment, they're just not the greatest asset because, unfortunately, they don't make money selling when the price to buy these things are too expensive. They have a hard time. They have difficulties. So naturally, if interest rates were to reduce, what you get is more spending. These asset prices will increase because now they can make more money. They have the ability to sell to people because people are willing to buy. So it's the same thing with housing. So if you're going to look at investing in a property, or investing in multiplexes, or investing in stocks and equities, the best times is going to follow. This is just the worst time of the economy right now, but it bodes an opportunity. So I just wanted to kind of lay out some of that information. I'll make more videos to kind of go deeper into these things, be more specific on different types of asset classes within the real estate market and ideas for anybody that looking to invest, whether you're looking to make just long-term returns in terms of equity, or are you looking to make cash flow, are you looking to just invest and diversify. I'd like to spend some time putting in some videos that might help and provide some value to you, the viewers, and see how I can help out, see how we can make something work perhaps, and at least get you guys the knowledge and education to make proper decisions. And timing is everything, and trying to explain to you the benefits of times where people are afraid and scared to make investments and everybody's running one way. You're wise and making proper decisions, and you're looking to take advantage of the situations. So I do appreciate you watching. I will continue to try and make more videos, and I hope that was of value to you, and we'll see you next time.